They're lying to you. While the media keeps you chasing Bitcoin and gold, billionaires are buying assets you've never heard of, assets so hidden, not even financial advisors can explain them. Forget the headlines. The real wealth is moving in silence. And here's the scary part. It's working. In 2025 alone, the top 0.01% increased their private asset holdings by $1.4 trillion, according to Credit Suisse. But none of it went into stocks. None of it went into crypto. You know where it went? Into 3 obscure off-market asset classes the public doesn't even know exist. No ETFs, no Robinhood buttons, no TikToks, just shell companies, underground deals, and strategic land grabs designed to lock the rest of us out permanently. This isn't theory, it's already happening. Bill Gates now owns more U.S. farmland than the state of Rhode Island. Peter Thiel has direct stakes in biotech databases storing the DNA of millions. And Saudi sovereign wealth funds are buying up hydropower plants and airspace in Montana and Utah. Quietly, relentlessly. If you're watching this, you're already late. But not too late. I'm going to show you the 3 secret assets billionaires are accumulating right now. Not gold, not crypto, not real estate, and more importantly, how you can still get exposure before they're completely locked away from the public. Ready? Let's start with number 3. And I promise you've never heard of it framed this way before. You want to know what the 3rd obscure asset billionaires are quietly scooping up while everyone else is glued to CNBC watching gold charts and Bitcoin price tickers? It's airspace rights. Yes, literal invisible corridors in the sky above buildings, land parcels, and transportation corridors. Sounds absurd, right? Sounds like one of those weird billionaire tax schemes you'd hear about in some offbeat podcast, but I'm telling you, this is very real. This is what hedge funds, sovereign wealth funds, and top-tier real estate investors are accumulating with laser precision in 2025. Why? Because airspace is the new oil in cities where vertical growth is the only growth left. And the kicker? You can't make more of it. Not unless physics changes. Let me show you how this works. In urban real estate, especially cities like New York, Tokyo, Singapore, and now increasingly cities like Austin, Miami, and Dubai, zoning laws limit how tall a building can be on a specific lot. But there's a loophole. Developers can purchase unused development rights, also called air rights, from adjacent properties. So if a building is allowed 40 floors but has only built 10, the remaining 30 floors of vertical capacity can be sold. And what do billionaires do? They buy the air, then either sit on it until it appreciates, or transfer those rights to a neighboring lot and build a super tower that punches through zoning ceilings. This is happening right now. As of Q3 2025, over $8.2 billion worth of air rights have traded hands in New York alone. That's up from $3.5 billion in 2020. In 5 years, the market has more than doubled, and most of the deals are not public. Billionaires like Stephen Ross, Hudson Yards, Harry Macklowe, 432 Park Avenue, and foreign sovereign wealth funds like the Qatar Investment Authority have snapped up tens of millions of square feet worth of unused vertical space, often paying more per square foot for air than land itself. Let me give you a real number. In 2024, an air rights transaction at 525th Avenue sold for $631 per square foot, while adjacent land was trading at $580 per square foot. That's right, the empty sky sold for more than the dirt it floats above. Why? Because in hyper-dense cities, you can't buy more land, but you can reach higher if you control the sky. Here's where it gets even more ridiculous. Some developers are now buying transferable development rights from historical landmarks, old churches, post offices, and industrial relics. These properties don't want to build taller, but they're sitting on untapped vertical gold. Developers buy their unused height allowance and stack it onto adjacent sites, creating Frankenstein towers built with borrowed sky. And billionaires? They're not just buying to build, they're buying to block. In 2023, Ken Griffin paid $75 million, not for land, but for the air rights above an adjacent building to his penthouse in Manhattan, just to make sure no one could ever obstruct his view. That's how powerful this game is. It's about control. It's about bottlenecks. It's about betting on the irreversible trend of vertical urbanization. By 2050, 70% of the global population will live in cities. Land can't expand. Cities can't grow outward. They grow up. And if you control the up, you control everything. Sunlight access, views, construction limitations, and shadow easements. Air rights are now bundled into financial derivatives, securitized into funds, and even auctioned in blockchain-backed token markets. There are already whispers of the first Sky ETF launching in 2026, an index fund tracking tokenized air rights. Sounds ridiculous? So did digital art in 2019. Now it's a $40 billion market. When urban space becomes gridlocked, the billionaires don't buy buildings. They buy the ability to build them, block them, or manipulate them. And airspace is the lever. But as eye-popping as this sounds, it's still not the most powerful asset billionaires are buying in 2025. What could possibly be more critical than controlling the literal sky above Manhattan? What asset is powerful enough to rank even higher than airspace in the hierarchy of billionaire accumulation in 2025? I'll tell you, and you're not going to hear this from financial news or your favorite investing podcast, because this asset isn't publicly traded. It isn't discussed at Davos or written about in The Economist, but billionaires are quietly hoarding it in plain sight, while regulators either look the other way or actively participate. It's genetic data infrastructure. Yes, you heard that right. Not DNA itself, not blood samples or ancestry kits, but the digital infrastructure that stores, owns, and monetizes the biological code of the human species. Let me explain how absurdly valuable this is. In 2025, your DNA is no longer just health information. It's the ultimate predictive data set. It predicts your disease risk, your drug response, your reproductive probability, your behavioral tendencies, your longevity curve, even your susceptibility to advertising cues. In a world where every ad is algorithmically generated, every treatment is personalized, and every decision is tracked through behavioral analytics, the value of your genome isn't hypothetical. It's immediate, monetizable, and weaponizable. And the billionaires saw this coming years ago. In fact, Blackstone's $4.7 billion acquisition of Ancestry.com in 2020 wasn't just a play on genealogy. It was a play on the world's largest private genetic database, over 20 million DNA profiles tied to personal information, location data, and family trees. That dataset is now controlled by a private equity firm with deep ties to defense contractors, biotech firms, and AI labs. Since then, the accumulation has only accelerated. As of Q4 2025, over 53 million Americans have submitted their DNA to private companies through consumer kits. That's more than the population of Spain. But here's the twist: most of those consumers signed away rights to their data without realizing it. Through the terms of service, those little checkboxes you skim past, they've given companies perpetual, irrevocable rights to analyze, sell, license, and train AI models on their genome. And that's what the billionaires are really after. Because DNA is the next oil, and whoever owns the pipelines owns the future. It's not just Blackstone. Peter Thiel's Palantir is now partnered with multiple genomics companies to build predictive models for national health systems. Google's parent company, Alphabet, owns Calico, a biotech firm focused on anti-aging therapies, and is quietly hoovering up genomic data from research collaborations. Jeff Bezos has backed Grail, a company developing multi-cancer early detection blood tests, and in 2024 they signed a partnership with a major insurance carrier to integrate genomic screening into standard policies. Translation: Grail now gets access to millions of DNA samples from insured patients with full legal indemnity. But the biggest move came in June 2025, when a little-known Swiss holding company, Helix Vault AG, backed by the Saudi Public Investment Fund and several Silicon Valley billionaires, acquired 4 of the top 10 genetic testing labs in North America. Not for the labs, for the databases. The company now controls anonymized but fully queryable genomic data for over 72 million individuals. What's the plan? To create the world's first private genomic cloud exchange, a platform where pharma companies, insurers, and governments can pay to run AI models against genetic cohorts. Think AWS for DNA. And here's the kicker. Unlike your medical data, which is protected by HIPAA, your genetic data is not. There is no federal law in the US that comprehensively protects DNA data from commercial use if it's been voluntarily submitted. And in 2025, Congress quietly shelved a bill that would have closed that loophole. Why? Because lobbyists from biotech and private equity firms pushed back. Too much money at stake. Let's talk about numbers. The global market for genomic data licensing was $6.2 billion in 2022. In 2025, it's projected to cross $28 billion, a 350% increase in just 3 years. But the real money isn't in selling raw data. It's in building AI models on that data and licensing the predictions. Predictive genomics is expected to be a $125 billion industry by 2030. That's bigger than global oil exploration revenue. Let that sink in. And who benefits? Not the people who donated their DNA. They get nothing. No royalties. No rights. No deletion ability. The benefit flows entirely to the data infrastructure owners. The billionaires who set up the shell companies, acquired the labs and wrote the contracts before anyone else knew what was coming. This isn't about ancestry reports or cancer screenings. This is about genetic capital, the most powerful form of data ownership ever created. And in 2025, billionaires are locking it down with ruthless efficiency. So while the world debates stocks versus crypto, these people are literally patenting the future of the human species. And I haven't even told you the most shocking part yet, because there's one asset class they're hoarding even more aggressively than all the others. One so foundational, so civilization-altering, that it dwarfs farmland, water rights, catastrophe bonds, airspace, and genetic infrastructure combined. You ready for number one? This is the one no one's talking about. The one that makes people roll their eyes, until they realize the billionaires already bought it. You want to know what the number one secret asset is in 2025? The one billionaires are accumulating more aggressively than water rights, more obsessively than catastrophe bonds, more strategically than farmland or even genetic data infrastructure? It's off-grid energy infrastructure. And no, I don't mean solar panels on your cousin's roof or a Tesla Powerwall for your garage. I mean entire decentralized energy systems, microgrids, hardened substations, private battery storage networks, and exclusive rights to local generation in energy-constrained zones. You have to understand, this isn't about green energy anymore. That narrative is dead. In 2025, energy isn't a political debate, it's a survival issue. And the ultra-wealthy are building their own private grids because they don't trust the national ones to survive the next 10 years. Let's get specific. Between 2020 and 2024, the U.S. experienced a 240% increase in grid disruptions, from cyber attacks, extreme weather, wildfires, and overloading. In California alone, public safety power shutoffs have become normalized. In Texas, millions lost power for days during a single winter storm, and grid regulators admitted the infrastructure was one failure away from collapse. What do billionaires see in all this? Fragility. And fragility is an opportunity, if you can afford the insulation. That's why, beginning in 2023, ultra-wealthy families and investment firms began pouring money into privately owned microgrids, self-contained energy systems capable of generating, storing, and distributing electricity entirely independently from the national grid. These aren't theoretical, they're real. Google's first microgrid campus is already live in Nevada. Walmart has partnered with Schneider Electric to deploy microgrids in over 100 stores. But the real accumulation is happening underground, literally. In 2025, 14 of the top 50 hedge funds in the U.S. are invested in off-grid energy REITs and infrastructure funds that acquire land in transmission bottlenecks, regions where energy supply is constrained and grid expansion is politically or physically blocked. They then build private generation solar, wind, even small modular reactors, and sell that energy at premium prices to desperate users who can't get enough power from the grid. Let me give you a number that should shock you. In 2025, in parts of West Texas, wholesale electricity prices hit $1,500 per megawatt hour. For context, the national average is $45. That's a 3,200% markup. And private energy owners with battery storage who could sell into those peaks made more money in 1 month than some S&P 500 companies make in a quarter. Now think like a billionaire. Would you rather invest in stocks that rise 8% a year, or in a hard asset that generates real-time cash flow every time the grid breaks? That's the bet they're making. And it gets more aggressive. The ultra-rich aren't just building microgrids on their compounds or corporate campuses. They're acquiring rights to stranded generation hydroelectric dams, geothermal wells, and decommissioned natural gas turbines in rural areas. Then they're connecting these to hardened, private transmission networks using blockchain-enabled energy contracts. One billionaire, whose name I won't say, but you know who he is, recently acquired a 30 MW geothermal facility in northern Nevada, signed an exclusivity contract with a local battery manufacturer, and now has a literal monopoly on power for the entire industrial park. He's leasing energy, not just land, to any company that wants to build there. Think about that. He's not a landlord. He's an energy lord. And here's the wildest part. Governments are incentivizing this. In the wake of grid instability, over 17 U.S. states now offer direct tax credits, land grants, and accelerated permitting to private energy investors who agree to build resilience assets. That's code for microgrids that can disconnect from the public system in an emergency and stay online while everyone else goes dark. Billionaires are using these policies to build fortified energy islands, complete with EMP shielding, cyber-hardened substations, and physical security. They are turning energy into territory, into power, into control. You want numbers? The private microgrid market was worth $24 billion globally in 2022. In 2025, it's expected to hit $65 billion, a 170% increase. And nearly all of that growth is coming from off-balance sheet SPVs, special-purpose vehicles set up by the wealthy to hide ownership, just like farmland, just like water rights, and just like genetic data. Quiet, relentless accumulation. No press releases, no interviews, just purchase after purchase after purchase. The wealthy aren't just preparing for blackouts. They're preparing for energy collapse and positioning to profit from it. And before you roll your eyes and think, this sounds like prepping with a billionaire twist, let me be clear, off-grid energy isn't a doomsday hedge anymore. It's a cash flow engine. It's a geopolitical weapon. And it's an asset class, one that's being financialized, tokenized, and sold in private placements to the elite, while retail investors are still arguing about EV stocks. You think Tesla's going to save you when the grid is down? Not without a private transformer and 200 kWh of hardened battery storage. Billionaires know that. So the next time you see a wildfire in California, a cyber attack in Texas, or an overloaded grid warning in New York, don't just think climate change. Think energy arbitrage. Someone somewhere just made money while the lights went out for millions. And odds are they're not just betting on it. They own it. That's the final asset. Or is it? Because here's the thing. These are the three most aggressively accumulated assets in 2025, but they're not the only ones. You're not supposed to know this. Because once you understand what billionaires are actually buying, the whole game looks different. You realize it's not about profits anymore. It's about control. Control of land. Control of water. Control of power. Control of you. While retail investors chase digital coins and meme stocks, the ultra-wealthy are building invisible empires, piece by piece in the real world. They're cornering the things that civilization can't function without. And they're doing it so quietly, most people won't even realize what happened until it's too late to buy in. We're watching the biggest private transfer of real assets in modern history. In 2025, less than 1% of the population controls over 47% of global wealth, and they're converting that paper wealth into resources that can't be printed, deleted, or confiscated. Because when the next system resets, they don't want exposure, they want immunity. So, ask yourself this. When the lights go out, when currencies crash, when food and water become the new gold, what will you own? Because billionaires already made their choice. And next, I'm going to show you exactly how they're doing it, down to the contracts, shell companies, and strategies that let them stay invisible while the rest of the world burns.